Hello everyone and welcome back to Explain the Charts. Today is November 19th, 2025, and we are doing an in-depth analysis of XAUUSD, or gold. The markets have been electric lately, with major headlines driving significant volatility. First, we'll cover the news that has been fueling this rally, and then we'll dive deep into the charts to see what the price action is telling us. Let's start with the fundamental catalysts. Over the past week or so, headlines have been dominated by growing expectations of a Federal Reserve pivot. Multiple reports from sources like Seeking Alpha and Forex.com have highlighted that investors are pricing in a nearly 70% chance of a December rate cut. This sentiment was amplified by weakening U.S. labor data and progress on ending the government shutdown, creating a perfect storm for a weaker dollar. As a result, we saw headlines proclaiming that gold had surged to $4,085 and even broke above $4,130 on these rate cut hopes. This has created an extremely bullish narrative in the news, with some analysts eyeing targets as high as $4,250. Now, let's see how this narrative translates to the price action on our charts. Looking at the daily chart, we can see a clear and powerful uptrend that has been in place for over a year. However, the last couple of months have been particularly volatile. Price set a new all-time high back on October 16th, touching nearly $4,380 before facing a massive rejection. What followed was a sharp correction, with price dropping over 6% in a single day on October 21st, eventually finding a bottom just below the $4,000 level. This brings us to the news-driven rally we just discussed. If we zoom in on this recent period, you can see the explosive move that began on November 10th. This massive green candle is a direct reflection of the market reacting to those dovish Fed expectations, sending the price soaring from $4,000 to over $4,100 in a single session. The rally continued for a few more days, but it's crucial to note where it stalled. We peaked around $4,245 on November 13th, failing to challenge the previous all-time high. This level acted as significant resistance, leading to a sharp pullback on the 14th and 17th, bringing us right back down to test the $4,000 area. Yesterday's candle on the 18th showed a strong bullish response from that support zone, closing up over 1% on the day. This tells us that buyers are still active and defending the $4,000 psychological level. So, in the long term, we're in an uptrend, but currently consolidating after failing at a key resistance. The major battleground is clearly defined between the $4,000 support and the $4,250 resistance. Now let's switch to the 1-hour chart to analyze the recent price action more closely. Here we can see the anatomy of yesterday's rebound. After finding a bottom near the $4,000 level in the early hours, the price began to form a clear upward trend throughout the session. We can see a pattern of higher highs and higher lows, which is a classic sign of short-term bullish momentum. The price pushed through several minor resistance levels and is now consolidating near the recent highs around $4,075. This consolidation is key. It's a pause in the action where the market decides its next move. Bulls will want to see this area hold as support for a continuation higher. Bears will be looking for a breakdown from this level as a sign that the rebound is losing steam. Finally, let's jump to the 15-minute chart to see the very latest price action from late yesterday. This time frame shows the push to the daily high around $4,082, followed by a slight pullback and consolidation into the close. The price is currently hovering in a tight range, building energy for its next move. This short-term view shows that while the immediate momentum is bullish, the price is approaching a potential resistance area from yesterday's peak. Traders today will be watching to see if we can break above this $4,082 level with conviction. A failure to do so could lead to a retest of support levels established during yesterday's climb, like $4,050 and $4,030. So, to recap everything and look ahead, let's lay out the key price levels and potential scenarios. Your most critical support level remains the psychological and technical zone between $3,998 and $4,040. As long as we hold above this area on the daily chart, the bullish case remains intact. To the upside, Immediate resistance is yesterday's high around $4,082. A sustained break above that opens the door to test the $4,145 area, and then the major resistance at the November 13th peak of $4,245. The ultimate bullish target remains the all-time high just shy of $4,380. For the bullish scenario to play out, we need to see price break and hold above the $4,082 to $4,100 zone, preferably on increased volume. I would place the likelihood of this continuation at around 60%, given the strong rebound from support and the prevailing dovish sentiment. Conversely, the bearish scenario would be triggered by a failure to break higher and a subsequent drop below the short-term support around $4,050. A definitive break below the major $4,000 support level would signal a much deeper correction is likely, with targets back towards the lows of late October. I'd give this bearish breakdown a 40% chance right now. Keep a close eye on any upcoming inflation data or commentary from Fed officials, as this will be the primary driver of the next major move. Watch the volume on any breakout or breakdown for confirmation. High volume on a move up reinforces the bulls, while high volume on a move down gives strength to the bears. That's all for today's analysis of XAUUSD. Remember, this video is for informational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.